Hello. We can now look at an example here as we continue with our revision classes, advanced financial reporting, and we are revising chapter 2. So far, in chapter 2, we have done group cash flow statements, consolidated income statements, consolidated statement of financial position, and this lesson we focus on preparation of foreign subsidiaries books, situations where in a group structure the parent may have acquired a foreign entity, an institution which is operating in a foreign company. When that situation arises, it implies that for obvious reasons we are dealing with different currencies. For that reason, it becomes necessary to translate the currency of the foreign entity into the currency of the parent company or where the parent company is operating from. In that case, whenever there is a translation of currency from one type of currency to the other, because we will be using different exchange rates at different dates, you may expect an exchange gain or loss. Now we will look at that as we illustrate our example here. We want to conclude revision for chapter 2 so that we may proceed with other chapters. And as I have told you, in this chapter, we are dealing with group accounts, which is chapter 2, advanced financial reporting. And I can see from your syllabus, you were required to understand subsidiaries, including foreign subsidiaries. And this example specifically touches on that particular area, that is subsidiaries, and specifically including foreign subsidiaries, a situation where the parent has acquired a subsidiary which is operating in a foreign country. So subsidiaries including foreign subsidiaries, piecemeal acquisitions, reduction in shareholding, and disposals, as well as statement of cash flows. As I've mentioned earlier, we've so far covered cash flow statements. You can get our classes, our discussions, and our revision classes concerning cash flow statements in our YouTube account, Fatima Institute. You can subscribe and you can get those classes there, examples, illustrations, and you will be okay with that. Now, important part that we will be covering next lesson is piecemeal acquisitions, reduction in shareholding and disposals. That's the only part we are remaining with, and that arises whereby, for example, you start the year with a company which is an associate, but within the course of the year, you can acquire more shares in that particular company. And for that reason, as you close the year, even though you started the year with that group member as an associate, it has already become a subsidiary. Or the other way around, you start the year with a company which is a subsidiary, but within the course of the year, you dispose some shares in that particular company, and for that reason, As you close your books of accounts, that company is no longer a subsidiary, but maybe an associate or a joint venture. That is a very important part as far as group account is concerned. The other part is accounting for associates and joint ventures, including foreign entities. We all know what constitutes group structures, how to identify the type of group members using the percentages as provided. We say that if the investor has invested more than 50% in the investee, then that investee becomes a subsidiary. If we have acquired 100% of the shares in the subsidiary, then the 100% acquisition of that particular investee becomes a subsidiary. However, if we have acquired more than 50%, but not 100% of all the shares, then the remaining part is assumed to have been acquired by the non-controlling interest or the minority interest. If, for example, we have acquired 90% of shares in company A, then the remaining 10% is assumed to have been acquired by the non-controlling interest, also known as the minority interest. That's the subsidiary. The other situation is where we have acquired 50% of the investee. Therefore, the remaining 50% may have been taken over by another company. Therefore, in this case, we have equal shareholding, and those situations are simply known as joint ventures or joint arrangements. The other situation is whereby you have acquired less than 50% of the shares of the investee, but more than 20%. Now, in that case, what you have is an associate. Associate, where you have acquired more than 20% of the shares in the investee, but less than 50%. So that is known as investment in associate. And lastly, we have financial instruments, where you have acquired less than 20% of the shares in the investee. These are financial instruments. So those 4 points are very critical, as we discussed in our previous discussions. Also understand how to calculate the goodwill using the 2 methods, full provision method and partial provision method. Things like impairment, intra-company sales of stocks, intra-company transfer of non-current assets, and anything else that we have discussed in the previous lessons. Most of these lessons you can get them in our YouTube Fatima Institute. Okay. Now, because the purpose of this lesson is to discuss or revise on this particular area concerning foreign subsidiaries, as it appears here, we just need to focus directly on our revision, because we have done the lessons, we have finished the lessons, we know what we are required to do as far as foreign entities are concerned. Do not forget about the concepts that we use whenever we are dealing with group accounts. Those concepts still remain the same. However, the only difference here will arise because you have to translate the currency, the foreign currency, into the currency of that country in which the parent is operating from. That is the reporting currency. Remember, in group accounts, now in company law, you mentioned something known as lifting the veil of incorporation. If you have, I believe at this level, you must have done company law, and you have done situations under which we can do the lifting the veil of incorporation of a company. And you mentioned somewhere concerning group accounts that you say that we prepare the books of the parent company as or the group company as if these transactions belong to one company. Even though that is not the case, the transactions belong to numerous companies. But for the sake of presentation and preparation of the books of accounts of group companies, we ignore that fact that in our group accounts, the information belongs to numerous companies, but we present this information as if it belongs to one company. That is what you do when consolidating, and that is the same thing that is discussed in company law. Now, for that matter, we will be translating the foreign currency into the reporting currency, the functional currency of the foreign entity into the reporting currency of the parent. And as I've mentioned earlier, when you are attempting to do that, you may have an exchange gain or exchange loss. All right. Now, what important things are we supposed to note there? That is, when you are translating the income and expenses items, because we'll be having incomes and expenses for the business, we usually use the average rate. We use the average rate. Now you'll be given different exchange rates prevailing at different dates. For example, you can be given the exchange rate. 1 shilling is exchanging at maybe 0.4. Now that's the exchange rate is at maybe a particular date, maybe as at the date of purchase or as at the date of acquisition. 1 shilling was exchanging at what rate with respect to the currency of the foreign country. Now, when you are translating incomes and expenses, we usually use the average. The reason why you use average is because incomes and expenses occur on daily basis. And when you are closing the books of accounts for the whole year, then there is no way that you can pinpoint a certain exchange rate which was prevailing for the entire period, and then maybe you use it to translate the expenses and incomes. But because these expenses and incomes are occurring daily throughout the year, we just try to find what was the average for the exchange rates for the entire period, and then you use the average. So incomes and expenses, you use average rate. Assets and liabilities, you use the closing rate. Remember, assets and liabilities, these are statement of financial position items. So you'll be using to translate the assets and liabilities, use the rate as at the closing rate or the balance sheet date. The rate is at the balance sheet date to translate assets and liabilities. Depreciation, you use rates used in the respective asset. Depreciation, you look at that particular asset which is depreciating, what exchange rate was used, so you have to use the same. Then equity and reserves, you use historical rate, and dividends, we use spot rate. I think that's enough introduction for that. But remember that, we have a solution here. We are taking Advanced Financial Reporting, December 2023, question 2, Foreign Subsidiaries. I have a solution here, which I will be discussing and explaining to you from the past paper. And as you follow again on this side, I'll also be explaining to you each and every item and other illustrations. Now, remember the major thing here, as far as foreign subsidiaries are concerned, is translating the currency from the foreign currency into the reporting currency. That is the currency used by the parent or where the parent is operating from. In an acquisition, definitely there has to be goodwill. So we will be calculating goodwill. When we acquired the foreign entity, there has to be goodwill. Check whether that goodwill was subjected to impairment, and the rest will be just a normal consolidation. And as you consolidate the income statement or the statement of financial position, you should be translating the currencies or those transactions using appropriate exchange rates as required and as I have just explained. Now I will just go straight away to our question. I will just go straight away to our question and we read it together. As we read the question together, I just request you to download. I advise that for you to understand our lessons and our revision classes well, download those papers and then you can just read those questions from your printout so that when you are doing the solution, you are able to understand well. Again, as I show my workings, also be taking notes. Just be writing your workings, and then once we finish our discussion, you can go through those workings and then you will be able to understand our solution. So straight away, I want us to go to the question that is the KASNEB paper, Advanced Financial Reporting and Analysis, December 2023, question 2. Question 2, okay. Let's just read the question together. Let's see that question. Question 2. Question 2 is what we are revising. We are told there, H Limited, a public limited company whose functional currency is the Kenya shillings, operates in the digital economy. The company has recently diversified its operations by acquiring shares in a foreign entity, S Limited. The functional currency of S Limited is the krona. Then we are given the following statements of financial position were extracted from the financial records of the two companies as at 30th September 2023. Now we are given H Limited. H Limited is a parent which is preparing its books of accounts in Kenya shillings. Remember, H Limited is operating from Kenya, but it has a foreign subsidiary which is reporting its currency. The functional currency is in krona. Now the information is presented. You can see how the information is presented for the two companies. That is non-current assets, property, plant and equipment, investment in S Limited, other intangible assets, current assets, inventory, trade receivables, cash and cash equivalents. Equity, ordinary shares, share premium, retained earnings, total equity. Then non-current liabilities, 10% loan stock, deferred tax. Current liabilities, trade payables, current tax. I think everything you are able to see that. You can first look at how the statements look like for the parent and for the subsidiary. It's question 2. Then once you have read first and you understand that information for the parent and the subsidiary, the figures given there is a statement of financial position. Then you go to additional information. Additional information is what you want to look at. Now, what are we told? Number 1. Let's read number 1. On 1st October 2022, H Limited acquired an 80% controlling interest in S Limited for a cash consideration of shillings 3,000 million when the retained earnings of S Limited stood at 540 million krona. The fair values of the identifiable net assets of S Limited were krona 2,700 million. The excess of the fair value over the carrying value was due to an increase in value of plant whose remaining economic useful life approximated 5 years of acquisition. Number 2. H Limited uses the fair value method to measure the non-controlling interest in subsidiaries. The fair value of the non-controlling interest in S Limited on 1st October 2022 amounted to krona 900 million. Number 3. On 1st October 2022, H Limited exported goods worth shillings 180 million on account to S Limited. This transaction has been recorded by both entities. However, the account payable is still recorded at the rate of exchange that prevailed at the date of the acquisition. In the financial statements of S Limited, all these goods are being sold to third parties by S Limited as at 30th September 2023. Number 4. Goodwill arising on acquisition of S Limited had not been impaired since acquisition. Number 5. The following foreign exchange rates are relevant. 1 shilling to krona, 1st October 2022. So 1 shilling is exchanging at 0.90 krona. That is September 2023. 1 shilling is equals to 0.80 krona. Average for the year to that is September 2023. 1 shilling is equals to 0.75 krona. And number 6, S Limited has not issued any ordinary shares since the date of acquisition. Okay, that is it. But what is required? They were having the question now. What were you supposed to? What was required of you? Required the value of goodwill arising on acquisition of S Limited in Kenya shillings. And number B, consolidated statement of financial position for H Limited, for H Group as at 30th September 2023. Now your question That was your question. That was your question. And the additional information was there. You can check your question. Look at your question. Question 2 is there. Question 2 is there. Your question 2 is there. Question 2 is there. And that is what you are required. Now, that is our question. I want to illustrate now. I want to do an illustration. Now, the consolidated statement of financial position for each group is what appears on the board, but I will be illustrating and explaining in a detailed manner. Now you are told that, so important things to note here is that S is a foreign subsidiary in the sense that we acquired 80% of the subsidiary. Well, you are told that in additional information number 1. On 1st October 2022, H Limited acquired 80% controlling interest in S Limited. So that's a subsidiary. The remaining 20% goes to NCI. Another important thing is that S Limited is a full year foreign subsidiary. It's a full year. It was acquired by the time we are preparing these books of accounts. We have this subsidiary for 1 year. The reason is that we are required to prepare consolidated statement of financial position for each group as at 30th September 2023. But when was the acquisition? So if the books of accounts for this company are prepared on 30th September 2023, obviously, if the year ends 30th September, they start the year 1st October. But here, the acquisition was by looking at additional information number 1 on 1st October 2022. So if we acquired this company 1st October 2022 and the year ends, we prepare the books of this company on 30th September 2023. Therefore, this is a full year subsidiary, full year foreign subsidiary. Now that is what we hope to have clarified there. The other thing now, because we are told to calculate the value of goodwill arising on acquisition of S Limited in Kenya shillings. Now, we use the full consolidation method here, and we take the purchase consideration that was paid by the parent to acquire the subsidiary, we plus the fair value of the NCI, then you sum up the two figures, you less net identifiable assets of the subsidiary. Now that you are dealing with foreign subsidiary, what you do is that you'll be having two columns. One, not two, but 4. One column for the particulars, another one for krona, that is a foreign currency, another one for exchange rate. Which rates are you using to translate the krona into Kenya shillings? And then the last column for shillings. Now that is what you need for you to calculate your goodwill. It's simply the same concept of calculating goodwill, only in this case, you must translate the foreign currency into the reporting currency. And the reporting currency in this question is Kenya shillings. So that is what I want to show you. I want to show what we have done for us to calculate goodwill. Now, another important thing that you should note is that once you calculate the goodwill, this goodwill will have the value as per the rates which were prevailing, the exchange rates which were prevailing as at the date of acquisition. Now, because the goodwill that you have calculated is as at the date of acquisition, the rates prevailing as at the exchange rates. When, remember, the transaction or the acquisition took place on 1st October 2022. But when you are closing the books of accounts, remember goodwill has to be consolidated. It's a non-current asset. So the same goodwill that you have calculated here on 1st October 2022, when you are closing your books of accounts on 30th September 2023, you have to retranslate the same goodwill using the exchange rates prevailing as at the balance sheet date. That is, the rates prevailing as at 30th September 2023 to see whether there is a translation gain or loss. Now that is the point that I want us to, I will show you right away. We are answering goodwill. What is our goodwill? What are we supposed to do concerning goodwill? So the first thing is to establish how much did we pay to acquire the subsidiary. So we are told that's the first thing, because I need to know what is the purchase consideration. We are told we paid 3,000 shillings. I'm looking for goodwill. I want us to calculate goodwill together, and you can revisit your number 1, whereby you are told on 1st October 2022, H Limited acquired an 80% controlling interest in S Limited for a cash consideration of shillings 3,000 million. 3, that is what you paid. So if we paid 3,000 million, then as I have told you, this is how you go about it. There are some important points there to note. Goodwill, purchase consideration minus share of net assets acquired. Now these are important points, the rates that you use to translate. Then solution for number 1. Goodwill, we are using full consolidation. So what you do, you take the purchase consideration. We have been told, you can see I have a column for particulars, another column for krona, that is the functional currency of the foreign entity. Then the exchange rates prevailing as at the date of acquisition, that is the rates, the exchange rates as at 1st October 2022. You're saying it was 1 shilling is equals to 0.9 krona. Now see that we spent 3,000. That is what we have been told. The purchase consideration. We are taking the purchase consideration. We are trying to calculate goodwill. The purchase consideration we spent 3,000 shillings. You can translate the 3,000 shillings into krona by using 0.9 as the exchange rate, and we get 2,700 krona. So we have translated that. Remember what I have told you, that you should have a column where you are showing the foreign currency, the exchange rates, and the reporting currency at the same exchange rate. So purchase consideration, we are told we paid 3,000, and as at the date of acquisition, the exchange rate is given in the paper. 1 shilling is equals to 0.90 krona. Now we earned fair value of NCI. The fair value of NCI, I want to show you the fair value of NCI. The fair value of NCI. Read point number 2. Point number 2 tells you, point number 2, H Limited uses the fair value method to measure the non-controlling interests in subsidiaries. The fair value of the non-controlling interest in S Limited on 1st October 2022 amounted to krona 900 million. I'm interested with the krona 900 million because that is the fair value of the non-controlling interest in S Limited. So point number 2 is where you are given the fair value of NCI. We usually earn that. We know how to calculate goodwill. So just taken, I'm through the purchase consideration. The 3,000 which we paid, we are through that. We earned fair value of NCI. We are told, as at the date of acquisition, the fair value of NCI was 900 krona. Translate using 0.90, and that becomes shillings 1,000. So you have said 1 shilling is equals to 0.9. What about 900 krona? What is that value in shillings? So we sum them together. We have 3,600 krona. That's 2,700 plus 900 is 3,600 krona. 3,000 plus 1,000 is 4,000. So that part now, remember we are calculating goodwill, you'll be lessing net assets of S Limited. Net assets. Now, net assets, simply, when we talk of net assets, as far as calculation of goodwill is concerned, we usually mean ordinary share capital, share premium, revaluation, then profit as at the date of acquisition. However, in this question, we have been given the fair value of the subsidiary as at the date of acquisition. So the only thing is for you to translate those figures in using the exchange rates prevailing as at the date of acquisition. So fair values, what were the fair values? What were the fair values as per the question? Are we given the fair values? Are we given the fair values of the subsidiary? So what will you less? We are looking for that. Can you identify that? The fair values? Identify the fair values. Are you able to identify that? Now just check additional information number 1. That is where you get the fair values of the subsidiary. You are told on 1st October 2022, H Limited acquired an 80% controlling interest in S Limited for a cash consideration of shillings 3,000 million. When the retained earnings of S Limited stood at krona 540 million, the fair values of the identifiable net assets of S Limited were krona 2,700. So we have been given 2,700. The 2,700 is the fair value at acquisition. The fair value is at acquisition. The figures have been given. 2,700 fair value. The fair values, you can see fair value of the subsidiary as at the date of acquisition is 2,700. Translate using exchange rate 0.9, that becomes 3,000 shillings. Out of that, now you can calculate your goodwill in krona and in shillings. Just take that 600 kronas minus 2,700 kronas, you get 900 krona. And then in shillings, 4,000 minus 3,000, 4,000 minus 3,000, you get 1,000. So that is our goodwill. That is our goodwill. We've shown some workings there to help you understand. You can look at the working number Roman 1, Roman 2, and Roman 3. We are just explained there. It's the purchase consideration. How we are getting the Corona 2700, the fair value of NCI, how we are getting 1,000, the fair value at acquisition, how we are getting 3,000. So those are just simple workings for you then to understand. But we have answered question 1. The answer for question 1 is 1,000. The question 1, we were required, I think that is what they required us to do. That was question number 1. If that is what was required of you, then question 1 we must have done. Okay, question 1 is, as I see, they're asking you the value of goodwill arising on acquisition of S Limited in Kenya shillings. In Kenya shillings, the value of goodwill. The value of goodwill arising on acquisition of S Limited in Kenya shillings. Our answer for that, the answer for that is 1,000. The answer for that, they're asking us the goodwill in terms of Kenya shillings. The goodwill we have gotten 1,000. The last column, 4,000 minus 3,000, we got 1,000. That's the answer for that. Now something that I will mention here as far as that goodwill is concerned is that this goodwill of 1,000 shillings, note that we have arrived at 1,000 shillings goodwill using the exchange rates which were prevailing as at the date of acquisition. That is, the rates prevailing as at 1st October 2022. 1st October 2022. Those were the exchange rates. That is, 1 shilling was exchanging at 0.90 krona. So, when we start consolidating the statement of financial position, note what we have said earlier, that statement of financial position items should be translated using the closing rate or the balance sheet rate, the rates prevailing as at the date of the balance sheet. Therefore, this goodwill, when we start closing the books of accounts, the 1,000 that we have calculated in answer number 1 should be retranslated using the rates which will be the exchange rates that will be prevailing as at the closing balance date, and that is the prevailing balance is as at 30th September 2023, and I think it to be 0.80 as it has been given there. That's important thing to note. So when you start consolidating your statement of financial position, don't use goodwill as 1,000, the one you have calculated. This goodwill that you have calculated is prevailing. We are using the exchange rates prevailing as at the date of acquisition. But when closing the books of accounts, you must translate the same goodwill using the exchange rates that will be prevailing as at the balance sheet date. That's important. In that process of retranslating that goodwill, you may expect an exchange gain or exchange loss. If there is an exchange gain, then that gain has to be shared between the NCI and the parent using the appropriate percentages. In our case here, we acquired 80%, and the remaining 20% will be taken by NCI. That's warranty, but just to have that clue, we are going to do it practically. So, important point to note here, and I wish to present this just to you. Note, this note 1, that the goodwill computed above is at the date of acquisition, that is the 1,000, is as at the date of acquisition. That is 1st October 2022, where we have used the exchange rate of 1 shilling is equals to 0.90 krona. Those exchange rates have been provided there. However, when presenting our statement of financial position, i.e., as at 30th September 2023, we will use exchange rate of 1 shilling is equals to 0.80 krona. Since the goodwill will have been translated using different exchange rates prevailing at different dates, such may result to exchange gain or loss. Such a loss or gain will be shared between the parent at 80% and NCI at 20%. Now, I want to illustrate that right away, what I'm saying. That determination of goodwill is at the balance sheet date. We will translate the goodwill amount using the exchange rates prevailing as at the balance sheet date. That is 1 shilling is equals to 0.80 per krona. Now, I want to translate this. Now, remember, I will be translating the krona. We have gotten goodwill in terms of krona, 900 krona. Now remember what we have done. Now what I'm saying, I just want to present that one to you. Let me show what I'm trying, the concept that I'm trying to talk about here. You can see this goodwill here. This goodwill, we have gotten goodwill 900 krona, which is the same as 1,000 shillings. Now I will consider this 900 my goodwill by the end of the year. And by the end of the year, if you look at our exchange rates in the paper, we are told as at 30th September 2023, the exchange rates 1 shilling is equals to 0.80 krona. I want to translate this 900 using 0.80 as at the balance sheet date. So what I do, I want to see whether there was a gain or loss on retranslation. So try to start this. Now look at goodwill as at acquisition. That is goodwill as at 1st October 2022. We calculated in our workings number 1, solution for number 1. We got our goodwill as at the date of acquisition, we got 900 krona. The rate that we used was 0.9, and we got shillings 1,000. Now, and that was our answer for question number 1. Now the same goodwill on the closing date as at 30th September 2023, the balance sheet date. This 900 we retranslated using 0.8 because that is the exchange rate as at that date. So I will say 1 shilling is equals to 0.80 krona. What about 900 krona? And I'll multiply 900 times 1 over 0.80 and I will get 1125. So if you translate 900 krona using 0.80 as your exchange rate, and that is the rate prevailing as at the balance sheet date, you get shillings 1125. So what does it imply? What is the implication? If as at the date of acquisition, my goodwill was 1,000, but as at the balance sheet date, as at 30th September 2023, my goodwill is 1125. There is a difference of 125. It's like my goodwill has increased by 125 shillings. So that is an exchange gain, which is 125. That is the difference between 1,000 and 1125. 1125 minus 1,000. This 125 is an exchange gain which has to be shared between the parent and the NCI. So the parent takes 80%. Remember, we acquired 80% of that foreign subsidiary. So that gain, the parent takes 80%. 80% of times 125 is 100, and NCI takes 20%. So 20% of 125 is 25. You sum up the two, just go back to 125. So that's what I mean by that point. Translate the goodwill, and then that is you are translating the goodwill which you calculated as at the date of acquisition using the exchange rate prevailing as at the balance sheet date to identify whether there was exchange gain or loss. Okay, I think that's well explained. I given a note there. Maybe you can read that note for yourself. Note that note which I have shown there. You go through that note. The goodwill computed above. Now, when I talk of the goodwill computed above, now maybe you don't see it above there. What you see above is December 2023, question 2, AFR. Maybe I could have said the goodwill computed in the previous page. Now that would sound more straight than saying the goodwill computed above. I don't see any goodwill above there. So it is in the previous page. So let me rectify that. The goodwill computed in the previous page, and we got the goodwill as shillings 1,000, which was the same as 900 krona. So the goodwill computed in the previous page, if I read it that way, is at the date of acquisition, that is 1st October 2022, where we have used the exchange rate of 1 shilling is equals to 0.90 krona. However, when presenting our statement of financial position, i.e., as at 30th September 2023, we will use exchange rate of 1 shilling is equals to 0.80 krona, since the goodwill will have been translated using different exchange rates prevailing at different dates. Such may result to exchange gain or loss. Such a loss or gain will be shared between the parent at 80% and NCI at 20%. i.e., so you can see our workings down there. Determination of goodwill as at the balance sheet date. We will translate the goodwill amount using the exchange rate prevailing as at the balance sheet date, i.e., 1 shilling is equals to 0.80 krona. So we have compared the goodwill as at the date of acquisition, which was 1,000 shillings, which was translated using 0.90, and the same goodwill, what will be its value if translated using the exchange rates prevailing as at the balance sheet date, that is 0.80. We got 1125. There is a gain of 125. The difference between 1,000 and 1125, which is 125. Now this gain of 125, you have to share between the parent to get 80% of 125, which is 1,000, and the NCI has to take its share of 20% of 125, which is 25. So that is that. That's the point that I wanted you to understand well. Now the other thing, the other working now what you start writing there now, because what we are doing is question number 1. What I was doing for you was the value of goodwill arising. What I was trying to illustrate up to that, I was doing the value of goodwill arising on acquisition of S Limited in Kenya shillings, and you are given 6 months. The value of goodwill arising on acquisition of S Limited in Kenya shillings, and we got 1,000. That was the answer. So anything else was just an illustration so that you may understand in details the concept of translating goodwill, or when you acquire a foreign subsidiary, how do you calculate the goodwill arising in that case, and what goodwill will you account for in the statement of financial position by the end of the year. You will not use 1,000. You will use 120. You use 125. As you see here, even though we'll be coming back to this, you can see here we have used 1125 in the consolidated statement of financial position. Goodwill as at the balance sheet date. You're using 1125 because we have 1,000. We calculated 1,000, but we have realized when we retranslate the same goodwill using the exchange rates prevailing as at the balance sheet date of 0.8, we got extra by 125. So 1,000 plus 125, the gain. 1,000 plus 125 is 1,125. So when consolidating our statement of financial position, then goodwill, you not use 1,000, you will use 1125. That is the goodwill as at the date of acquisition plus the gain which occurred upon retranslating using the exchange rates prevailing as at the balance sheet date. Okay, that's question number one. So we have done question number one. Question number two is consolidated statement of financial position for H group as at 30th September 2023. You are given 14 marks. Now the workings are here. You can just be looking at these workings here as I illustrate each and every point. Now remember what is involved in consolidating statement of financial position. We said that you pick the items for the parent plus the items for the subsidiary. Now this subsidiary is a full year consolidation. That's for this. I mean, it's a full year subsidiary, and you will be translating. See that in the question, the reporting currency, which you find in the books of the parent, they are in shillings. Now, the items in the subsidiary, they are in krona. Translate those items using the exchange rates as at the balance sheet date. The exchange rates that you have been given is at 30th September 2023 is that 1 shilling is equals to 0.80 krona. So you'll be translating the items in the books of the subsidiary, which is in krona, translate them into shillings. And that's why you can see most of these items you are dividing by 0.8. You are translating using 0.8. Most of the items, 0.8, 0.8. Most of the items you can see here. We are translating the items in the books of the subsidiary into Kenya shillings, which is a reporting currency, using the rates prevailing as at the balance sheet date, which has been given. Now, I want us now to take question number 2, which requires you to prepare consolidated statement of financial position for H group as at 30th September 2023. Now, you check here. Now, write working number 1. Working number 1. Show these workings. Just write working number 1. They will help you to understand each and every figure as it appears here. So you can have those workings, they will be self-explanatory when you are doing revisions during your own time. Now, my working number 1 I will take note number 3. I'll show working number 1, which is relating to note number 3. And I am told that I want to show point number 3. How should I go about working my working number 3? Now what I'm told is that on 1st October 2022, H Limited exported goods worth shillings 180 million on account to S Limited. This transaction has been recorded by both entities. However, the account payable is still recorded at the rate of exchange that prevailed at the date of the transaction in the financial statements of S Limited. All these goods had been sold to third parties by S Limited as at 30th September 2023. Now, by working number, you're working 1. Now, we move very fast now. Working number 1 is that, now what you have been told is that there are sales of goods as that. So what you do is retranslation of payables, which is to do with note number 3 of S Limited due to H Limited. So what you do is that these credit purchases as at 1st October 2022, you translate them, the value, they sold goods worth 180 million shillings, that is as at 1st October 2022. Translate using 0.90 because as at 1st October 2022, the exchange rate was 1 shilling is equals to 0.90 krona. You get 162 krona. Then translate the same shillings, the 180, using the balance sheet date. Remember, payables or creditors are balance sheet items. You translate the same figure into krona, the 180, this point here. You translate the same 180 using the balance sheet date exchange rate of 0.80. 1 shilling was 0.80 krona. What about 180? You get 144. So in that case, there is foreign exchange gain of 18. So instead of paying 162, we will pay 144. In that case, you can see we are paying less by 18. 18 krona, which if translated on the same date, using the same exchange rates prevailing as at the date, the balance sheet date, you get to 22.5 shillings. So due to the translation of shillings 180, using different exchange rates, we end up paying less by 18 krona, i.e. 18 krona is an exchange gain. The 18 krona should be translated into Kenya shillings using the balance sheet rate, and you are getting 22.5. So that was my working number 1. So that should be as well. That should as well be your working number 1. So in that case, there's a translation gain. There is a translation gain. Now your working number 2. I want you to look at your working number. Show your working number 2. Post-acquisition profit or retained earnings. Remember that S Limited is a full-year foreign subsidiary. Now, important points to note here is that when we acquired this foreign subsidiary, it earned retained earnings worth 540. By the end of the year, their profit was 1442. That is by 30th September 2023. So what was their post-acquisition profit? How much profit did that subsidiary make alone? From 540 up to 1442. The difference is 902. 1442 minus 540, you get 902. So the 902, see, you are comparing 540. You are told somewhere is at the date of acquisition, the retained earnings in S Limited was 540 krona. But in the statement of financial position, as at 30th September 2023, they earned 1442 krona. So how much profit did they make alone? That is the profit after acquisition. Otherwise, what you call post-acquisition profit. 1442 minus 540 is 902. And that is why if you take 540 plus 902, you get 1442 krona. Now let me show what I'm trying to say. The 540, the profit is at the date of acquisition. Go to point number 1. Point number 1, you are told on 1st October 2022, H Limited acquired an 80% controlling interest in S Limited for a cash consideration of shillings 3,000 million, when the retained earnings of S Limited stood at shillings 540 million. So that is my point. My point is, when the retained earnings of S Limited stood at shillings, not shillings, but krona, 540 million. So point number 1, when we acquired that foreign subsidiary, their profit was 540 krona. However, if you look at the financial statements, can you see retained earnings? The parent has 5,900 shillings and the other company has what? Can you see 1442 there? 1442, that 1442 krona is in the books of the subsidiary. 1442, retained earnings. You can see total equity and liabilities under the equity. Retained earnings for the parent, shillings 5,900, and for the S Limited in krona, 1442. So what I'm trying to say is that I'm trying to establish how much profit we made after acquisition. How much profit did we make after acquisition? So I'm taking 540. Our profit is at the date of acquisition, and then the profit by the end of the year. The difference now tells me how much profit I made. Now, under the same workings, we want to see, there is an important thing to note there, that when you acquire a group member, what you acquire is usually acquire ordinary shares, share premium, and retain profit as at the date of acquisition. That is actually what we acquired. Ordinarily, that is what we are supposed to acquire. But we are told something else different. Now, ordinarily, what could we have acquired in the books of the subsidiary? Now, just identify the equity side. You can see equity. You have ordinary share capital, 1560 krona, share premium, 200, and then we also include retained profit. Profit is at the date of acquisition. You are not supposed to use 1442. What you use is the profit is at the date of acquisition, which is given in additional information number 1, 540. I want to see if that is what we did, because we paid the net identifiable assets as at the date of acquisition. We are told in additional information number 1 was krona 2,700. Is that what we get from our equity. Now, if I look here, if I look at this point here, if I'm purchasing equity, I could have taken ordinary shares 1560, which you can see here. You can look at that, the S Limited. Ordinary shares 1560 plus share premium 200 plus retained profit as at the date of acquisition, which is given as 540. Additional information number 1. So if you take 1560 plus 200 plus 540, we get 2700. Get 2700. But something else is told. A different story is told. You can see ordinary shares, you take 1560, share premium 200, then profit as at the date of acquisition 540. If you add them together, you get 2300. But ordinarily, that is what we expect us to have paid for, but we are given net identifiable assets is a different figure. Additional information number 1, you are given 27, this figure here, 2700 krona. The fair value of the identifiable net assets of S Limited was 2700 krona. The excess of the fair value over the carrying value was due to an increase in value of plant whose remaining economic useful life approximated 5 years at the acquisition. So, why are we paying 2700 and not 2300? That is called a revaluation. So the difference between 2300 and 2700 is because of revaluation. The difference is 2700 minus 2300 is 400. So 400 krona is a revaluation gain. Revaluation, the difference now. Revaluation. So I continue with my working number 2, and I will show you the profit for the year in the books of the subsidiary. What is the profit for the year? How much profit did we make for that particular year? Now see what I will do. Post-acquisition profit, 902. We have shown 902. If you look at, you see I've done the 902 here. The 902, we have explained that. That was a post-acquisition profit. 902, we less depreciation now. That asset whereby we are saying the net identifiable assets was 2700. However, we have noticed the net assets was valued at 2300. This 400, the revaluation, depreciated. It has expected life of 5 years. So 400, remember the 400 is here. We have shown this 400. The difference between 23 and 27 is 400. Depreciated because it has expected life of 5 years. 400 over 5 is 80. Remember, this subsidiary was a full year subsidiary. We have it for the full year, the 1 year, full 1 year, no apportionment. 902 minus 80, then we plus translation gain on payables. Refer to working number 1. When we translated the payables, there was a gain of 18 kronas. 18 kronas somewhere here. This 18 we have done. 18 is a gain. We translated that figure and we bent that particular gain there. The 18 is in working number 1. 18. You can see my Post-acquisition profit, the 902, which you have done here, 902, we less depreciation. This asset, we say there was a revaluation of 400, expected life of 5 years, so per year, depreciation will be 80. We minus that, then we plus translation gain of 18. So the profit for the year is 840. If you can retranslate using the appropriate exchange rates, you get 1120. Okay, the most important thing is knowing this 840 krona, which is given there. That is working number 2. Working number 3, we retranslate. Retranslation of net assets. Retranslation of net assets. Retranslation of net assets in S Limited. Now you have the particular, the krona, the rates, and the shillings. Net assets as at the start, we got 2700 krona. Net assets as at the start was 2700. 2700 krona. Now, you may be asking, where is that originating from? The 2700 krona. Where has it been mentioned? In additional information number 1, we have put the fair values of the identifiable net assets of S Limited was 2700 krona. That figure has been given there. You see there, the 2700 krona for S Limited was 2700. That is exact the date of acquisition. Now you translate using, you'll be translating that using the exchange rates as at 1st October 2022, you get 3000. We earned profit for the year, which is in working number 2, we got 840. Now this profit you translate using the averages. The average exchange rate was 0.75 and you get 1120 shillings. So the closing net assets will be that 540 krona, that's 2700 plus 840. And in terms of shillings, 3000 plus 1120, which is 4120. So that's the translation of net assets. Now working number 4, the exchange gain on translation of net assets. Now if you take the 3540 and you translate this 3540 krona here, you see the closing net assets is 3540 krona. You translate it using the closing rates of 0.8. Translate using 0.8, which is a closing rate, you get 44.25 shillings. If you compare with 41.20, there is exchange gain of 305. Exchange gain of 305. You have taken closing net assets of that 540, translate using the closing rate, whereby the closing rate you had been told 1 shilling is 0.8 krona, and you get 44.25. Compare this using 41.20. 44.25 minus 41.20. There is exchange gain of 305. Allocate that. The parent takes 80% of 305 and the NCI takes 20% of 305, which is 61. Working number 5 is about retained earnings. So for the retained earnings, you take the entire amount, the entire profit of the parent, which is 5900. We earned share of retained earnings of S Limited. Now S Limited made a profit of 840 krona, which we have seen somewhere. This 840 krona translate using the average. The average for the year was 0.75. If you translate 840, which you have calculated, in working number 2, if you go to working number 2, you find 840 krona. Translate using the average, which is 0.75, you get 1120. The parent takes only 80% of 1120, which is 896. You add together, you get 6796. I think you have understood that. For the parent, you take the entire profit. For the parent, and you know how to consolidate that. For the parent, you are taking retained earnings. Retained earnings. See that retained earnings there. This figure, 5,900. You are taking that 5,900 there. Is a retained earnings, 5,900. But for the subsidiary, we have established the profit for the year. In our previous workings, see this 840 here. Profit for the year. We started with post-acquisition profit of 902 minus depreciation of 80 plus translation gain 18. We got 840. So if you translate 840 using the average exchange rate, whereby 1 krona is equals to 0.75, no, 1 shilling is equals to 0.75 krona, you get 1120. So this 1120, we are taking, you see, as the parent or the holding company, the working number 5, the parent we receive, our profit was 5,900, and then their subsidiary meant a profit of 1120 shillings after translating. We take 80% of that. So the total retained earnings is 6796. That's your working number 5. Working number 6 is NCI. For NCI, balance is at acquisition. The NCI is at acquisition. If you look at note number 2, you check note number 2. What's in the note number 2? You to read now. Note number 2, you can see it there. Note number 2, H Limited uses the fair value method to measure the non-controlling interest in subsidiaries. The fair value of the non-controlling interest in S Limited on 1st October 2022 amounted to krona 900. So, NCI, we have 900. 900 is what we have. NCI, the working number 6, balance is at acquisition, 900 krona, translate using exchange rate as at the date of acquisition. So you're using 0.9. 900 over 0.9 is 1,000 shillings. You earned NCI share. So NCI share, now you have seen somewhere that the subsidiary made a profit of 840 krona. If you translate 840 krona into shillings, we got 1120. So you can see here, 1120, we took 80% of that. The parent takes 80% of that, which is 896. So the NCI has to take the remaining 20%. 20% here, go and NCI share. 20% of 1120 to 24. We earn exchange gains. I refer to question 1. When we translated the goodwill, we got 125 goodwill. Refer to question 1. We got our goodwill. I should show you that the 125 The 125 where it is coming from, refer to that. That's where our 125 is coming from. We said 1125 minus 1000. You can see 100 under there. The 125, well, that was the goodwill. We got 125. Exchange gain, 125 times 20%. 20% goes to NCI. And then net assets, 61. Working number 4. Your working number 4, NCI receives 61. NCI receives 61 here, working number 4. So 1310, our NCI account, the balance carried down will be 1310. For retained earnings, 67, 96, 67 and 6. Now finally, with those are your working. So you look at your working number 1 up to 6, and then you have the final answer. H Limited statement of financial position is at 30th September 2023. Now finally, what you have is the same. What you have on the board is the same. Now you check that, and I elaborate from the other side. The non-current assets, PPE, goodwill, which was calculated, other intangible assets, total non-current assets. Then you have current assets, inventory, trade receivables, cash and cash equivalents, total current assets. Equity, we are using that of the holding company alone. Ordinary share capital, share premium. Retained earnings refer to working number 5. The exchange reserve, NCI, working 6. 10% loan note or loan stock, deferred tax, trade payables, current tax, and the total figures is given there. I think I should illustrate. I will illustrate that because there are certain points there which you may not understand directly. Now, when consolidating the statement of financial position, we just pick the property, plant and equipment, 8,500 shillings plus this 3,000 is in form of krona translated into shillings using the balance sheet date exchange rates. So you'll be using, if you look at the following foreign exchange rates are relevant. 30th September 2023, 0.8. 1 shilling is equals to 0.80 krona. So you are translating the items in the subsidiary. You know what you have in the subsidiary, those figures are in krona. Translate them into shillings. The 3,000 translate into shillings. And that is why you have taken, or you have taken there. Now, because I think you have this answer, first check this answer, then I explain from the board. Now, this is what you have on the board. Try to check that consolidated statement of financial position, PP. Look at the items you have there. The goodwill, other intangible assets, total assets, inventory, trade receivables, cash and cash equivalents, and all that. Then I explain from the other side. Now again, remember what consolidating is all about. Let me elaborate from the other side as we close the discussion. Now start with the PPE. start with a PPE. With the PPE, we have PPE. Go to the statement of financial position as given in the question. PPE for H, we have 8,500 plus S limited 3,000. At this 3,000, you not use 3,000 because that is krona. Translate 3,000 using the exchange rate prevailing as at the balance sheet date. You are given that additional information number 5. The following foreign exchange rates are relevant. That you are given 1st October and 30th September 2023. This statement of financial position is as at 30th September 2023. So we are translating the 3,000 PPE in the books of the subsidiary, which is in krona, into shillings using the rates prevailing as at 30th September 2023, which is 0.8. So, plus, now see that we revalued this, there is a revaluation gain, which we calculated and we got 400. We got 400, whereby, I believe you understand what I mean by that, whereby point number 1, where we are told the excess of the fair value over the carrying value was due to an increase in value of plant whose remaining economic useful life approximated 5 years at acquisition. Now I've shown that workings, the 400, now we go to the 400, refer to working number 2. Working number 2, you find the 400 there. So we revalued that asset. The assets were then net identifiable. I think the values were 27, and we purchased assets which had fair value of 23 and 27. There was a difference there between 27 and 23. The difference of 400, which is in working number 2, I think so. Specifically, that is working number 2, the 400. The 400, the valuation gain of the difference between 2300 and 2700. We got 400, so we plus, because the revaluation gain, these assets are increasing value. 400 krona, translate using 0.8, then that extra figure and expected useful life of 5 years. First translate the 400 and then you depreciate it into 5 years. So what I've done here, I'm just trying to say this revaluation gain of 400 translated using 0.8, then depreciation per year. You're just trying to divide. Once you translate the 400 into shillings, divide by 5, you get now depreciation per year. So that is what you'll be less in here. Depreciation per year. 400 over 0.8 times 1 over 5. So that is the PPE, the value in the parent plus that of the subsidiary. Translate the krona into shillings by dividing by 0.8 plus revaluation gain, the 400. Translate the 400 krona into shillings by dividing by 0.8 minus depreciation of the same 400. Translate the 400 into shilling and then you calculate the depreciation per year. If it has expected life of 5 years, what is the depreciation per year? And then you get 650. Goodwill, we have calculated goodwill. So the other items of PPE will be 12,650. Goodwill, we have gotten 1125. It was one of the requirements. 1125. we said the goodwill as at the date of acquisition was 1,000. Then there was when we translated, there was a gain of 125. So 1,000 plus 125, we got 1125. Then other intangible assets, those are given 1600 in the books of the parent plus 510 over 0.8. We are translating. In the subsidiary, you can find 510. If you look at other intangible assets, you have 510. Translate 510 into shillings, divided by 0.8, you get 22.7. Then inventory 2500 plus 1960 over 0.8. For trade receivables, now 2300 plus 1320 divided by 0.8. Now there was we sold goods to a group member worth 180, but you can sell to yourself. So what's the other person is calling receivable, the other one is calling it payable. So you less that figure as both a receivable and as a payable. So that is why we are lessing this 180. You can also see it has been deducted as a payable. We are told in additional information number 3, on 1st October 2022, H Limited exported goods worth 180. They were on credit, so trade receivables get that of the parent, which is 2300, plus that of the foreign subsidiary, 1320 krona, translating to shillings. All these figures which you have in the books of the subsidiary, because it is a foreign subsidiary, whose functional currency is krona. When consolidating, you have to translate the figures in the books of the foreign subsidiary into the reporting currency, shillings. That is why most of these items you are dividing by 0.8. Minus 80, the intra-company indebtedness, the 180, which we supply the other partner. Cash and cash equivalents is straightforward, 1600 for the parent plus 640 krona divided by 0.8. You get that figure. Equity and liabilities, ordinary shares, you take that of the parent alone. Ordinary shares for the parent, 5,000. Share premium, the share premium, you take that of the parent alone, 2,000. Retained earnings, refer to working number 5. We got 6796. Exchange reserve. Now this exchange reserve, you can see you're using 244 plus 100. Now we need some exchange. Now goodwill. In goodwill, okay, if you look at working number 4, if you look at your working number 4, you find that we have allocation of exchange gain, whereby we got 305. Go to exchange gain on translation of net assets. Exchange gain on translation of net assets, we show that one as working number 4, and we got 305. 80% of 305, we got 244. That is coming from there. 244 is 80% of 305. Then 100 relates to the goodwill. Relates to the goodwill. Go to the workings for the goodwill. That's where we started. 80% of 125. Goodwill. Allocation of exchange gain for the parent. 80% of 125, which is 100. So the exchange reserve 244. These are arising as a result of translation of different items. 244 plus 100, we got 344. NCI, working number, NCI is working number 6, 1310, 10% loan stock. That's given. Loans, 10% loan stock, 1300 plus 1360 over 0.8, that is given. And we got 3000. Deferred tax, 650 plus 1268 over 0.8, 22, that 5. Trade payables, that 800 plus 1160 over 0.8 minus 180. We sold goods to a group member. We said you are lessing that figure as both receivable and as payable. This is a trade payable, less 180. We minus 18. 18 was a translation. When you translated these payables, we translated these payables using different exchange rates. We got a gain of 18. That 18 you translate, you divide by 0.8. There is that point which you translated, refer to working number 1. The retranslation of payables, which you find in note number 3, of S Limited due to H Limited, there was a foreign exchange gain of 18 krona. This 18 krona you lessened. 18 krona translated to shillings by dividing by 0.8. The exchange rate prevailing as at the balance sheet date. So the trade payables, you are taking that 800 plus 1160 over 0.8. Translate this 1160 to shillings minus 180. We sold goods to ourselves on credit. The same 180 here. That 180 you find it in additional information number 3. The 180 shillings. See this 180, you are not translating because it is already in shillings. You are not dividing by 0.8. 1320 you are dividing by 0.8 because it is in krona. 180 don't because it is already in shillings. So the same debtors will still be creditors. Receivables will still be payables when you come on the other side. You are less in the same figure. Don't divide 180 by 0.8. It is already in shillings. Minus 18, the translation, when you translated those payables using different exchange rates, there was translation gain of 18 krona, translating to shillings by dividing by 0.8. You get that. Then current tax, 900 plus 440 over 0.8. 440 is in krona, translating to shillings by dividing by 0.8. You get that. And therefore, finally, you sum up all your figures and you realize that your total assets is equals to total equity and liabilities. So basically, when you are presenting consolidated statement of financial position, you just take the amounts in shillings for the parent plus the amounts in the books of the subsidiary, translate using the exchange rate is at the date, the balance sheet date. So those items, that's why we are using 0.8. You can see we are using 0.8 in most of those items. So what is happening on the board? On the board there, what you say is that you're just picking. We are consolidating the statement of financial position. You're just picking what is in the parent plus what is in the subsidiary. But those items in the subsidiary, you translate using the exchange rate as at the balance sheet date, which is given as what? That is September 2023. 1 shilling is equals to 0.80 krona. You are translating them using that figure. Any other adjustments is required. Okay. So the workings, you can just revisit your workings as we conclude all your workings. This question is, the answers appears here. December 2023 question 2, advanced financial reporting, foreign subsidiaries, consolidated statement of financial position. All the workings, where I have written workings, refer to particular workings. I told you to be writing the workings. I'll present that finally. If you didn't see those workings, we started by showing what to be done. How to calculate goodwill. Goodwill is given by purchase consideration minus share of net assets acquired. Items to translate incomes and expenses, you use average. Assets and liabilities, closing rate. In this case, you are using 0.8. The average here in this question is 0.75. Rates as at the date of acquisition, we used 0.90. Depreciation rates used in the respective assets. Equity and reserves, historical rate, dividends, profit. We showed goodwill. We calculated our goodwill, we got 1,000. The answer for question 1, we got 1,000. Then I just got to, now these things were done, all of them. We're just showing them briefly. You can pause your video if you want to check any important thing. That was your working number 1. Working number 1 was there. Working number 2. Working number 2 was there. Working number 3. You can write your workings number 3. Working number 3. Working number 4 and 5. And 6. And finally, the answer should appear like that. Your final answer should be like that. Show non-current assets. You show current assets. So you're just picking the amount in the books of the parent, which is in shillings. Then you translate the krona into shillings. If you look at the statement of financial position in your question paper, you are given some amounts in the books of S Limited, which is in krona. You're translating that figure using the exchange rate as at the balance sheet date, which is 1 shilling is equals to 0.8 krona. You'll be asking, what about 400? Translate those kronas into shillings using exchange rate as at the balance sheet date. You do the same for the current assets, equity and liabilities. The workings are there. And I think everything is clear. So your final answer should be that way. Now take the assignment, April 2022, question 1. April 2022. April 2022, question 1. That is your assignment. April 2022. April 2022, question 1. You can check that question if you find it. You can take April 2022. Question 1. I give that as your assignment. That's your assignment. April 2022, question 1. You can take that. Your assignment is there. Take your assignment there. April 2022, question 1. whereby you are told P Limited is a public limited company listed in the Securities Exchange. It has diversified its activities by acquiring S Limited, a company domiciled in a foreign country. Both companies prepare their financial statements in accordance with international financial reporting standards. The precedent currency of the group is the Kenya shillings, while S Limited's functional currency is a franc. The draft financial statements for the year ended that 1st December 2021 are as set out below. Statement of profit or loss for the year ended that 1st December 2021. We have P Limited in Kenya shillings and S Limited in franc. Revenue, cost of sales, gross profit, everything is there. Then statement of financial position is at that 1st December 2021. You see it there. Then you move to the next page and then you find continuation there. And then additional information. On 1st January 2021, P Limited acquired 80% of S Limited's 1,000 million franc one ordinary share for cash consideration of that 550 million franc. Number 2 is that the acquisition date, the carrying value of S Limited's net assets was 2,600 million franc, but the fair value was franc that 200 million. The excess in fair value over the carrying value was due to an unrecognized brand with a remaining useful economic life of 5 years as at the acquisition date. Number 3, the non-controlling interest in S Limited as at the acquisition date was valued at franc 1450 million using the fair value method. Number 4, as at that 1st December 2021, it was determined that the goodwill arising on the acquisition of S Limited was impaired by 10%. Number 5, the following foreign exchange rates are relevant. So you are given 1 shilling is equals to 5 franc on 1st January 2021. That 1st December 2021, 1 shilling is equals to 4 franc. Average for the year ended at 1st December 2021, 1 shilling is equals to 6 franc. Then required, determine the exchange differences as gains or losses arising on the retranslation of net assets and goodwill on the acquisition of the foreign subsidiary. Number B, consolidated statement of profit or loss and other comprehensive income for the year ended at 1st December 2021. Number C, consolidated statement of financial position as at that 1st December 2021. So I want you to take that question before next lesson. Is a question that we'll take that question together, but I recommend that first take that question before next lesson. Is April 2022 Advanced Financial Reporting and Analysis. April 2022 is question 1. That's how it looks like. It appears like that. I believe you still have the paper with you. It goes up to that, and then you move on to the next page where you have continuation of statement of financial position and the additional information as well. And you attempt that question. Now that is your assignment. You can first take it. Just take the assignment. We do it together, so make sure you attempt that question before next lesson. So that's the end of that. So remember to subscribe to the YouTube channel so that you may be getting the updates as and when we attempt and we upload these questions, our contacts are here 0727871093. So there's a contact, is Fatima Institute. Fatima Institute. So you can get these lessons from the YouTube channel, Fatima Institute. You can get these lessons among many more others. And our contacts are here in case you need any help. So that's the end of that. And our focus today was preparation or presentation of the books of accounts in group accounts where foreign subsidiaries are involved. So I believe we have done enough discussion concerning that. However, if you have any question, the contacts are here. You can just call and clarify whatever question that you want from our side. You can still get more lessons from Fatima Institute on our YouTube channel. Subscribe and you'll be getting more lessons as far as CPA is concerned. Okay, we stop at that, but make sure you take that assignment. That question that I've given you, attempt first, so that when we start doing it next lesson, you'll be having a lot of ideas and concepts as far as foreign subsidiaries are concerned. First, go through this question, understand it comprehensively, and then attempt the assignment that I've given you. If you face any challenge, as you do it together, the next lesson, you'll be able to understand. So we stop at that, and we will take a different question after we have attempted your assignment. But I'll take your assignment if you face any challenge. If you're okay with that assignment, then we don't need to take it together. We can take a different question whereby you'll be dealing with piecemeal disposal, piecemeal acquisition, whereby you start a company. By the start of the year, you have a subsidiary. Within the course of the year, you purchase more shares in that subsidiary, then it becomes maybe you started an associate. Within the course of the year, you purchase more shares in that company, it becomes a subsidiary. Or you start the year with a group member, which is a subsidiary. Within the course of the year, you dispose some shares, it becomes an associate or joint venture. What are we supposed to do about those situations? So our next lesson will focus on those areas, and that is enough for today. So let's meet next lesson.